Pfizer is one of the biggest pharmaceutical companies in terms of market valuation. But after climbing nearly 19% in 2018, the stock fell more than 17% in 2019 and has underperformed the broad market of pharma stocks. This summer, Pfizer announced an $11.4 billion plan to acquire Array BioPharma and to merge its generic and off patent drug units with Mylan. Pfizer also gained Food and Drug Administration approval for a rare heart disease drug. However, second quarter earnings were mixed. So is Pfizer stock a buy right now? Well, at the request of Jordan Baskin, let's take a look at Pfizer. Pfizer is a well-diversified company. On a year-over-year basis, Pfizer sales have grown for the last 7 out of 8 quarters. Adjusted earnings have grown for the last 10 quarters. In 5 of those quarters, Pfizer's earnings grew by double-digit percentages. However, Pfizer's adjusted earnings and sales have not performed well. Big institutional investors tend to look for stocks with accelerating earnings and sales growth. Revenue from older Pfizer medicines have struggled. Sales of Viagra suffered in the aftermath of generic launches from Mylan and Teva Pharmaceutical. As a result, Viagra sales plunged 73% in the U.S. in 2018. Across all products, Pfizer sales grew 2% in 2018. That followed a 1% decline in 2017. But Pfizer's sales are still far from the strength that they showed in 2010. That year, the pharmaceutical company reported a 34% jump in total revenue. Since then, sales have either declined or risen by a single-digit percentage. Using several other metrics, Pfizer is just scoring average at best. Much of this explains the relatively poor stock performance of Pfizer. On the flip side, in late July, Pfizer unveiled a plan to merge its Upjohn unit with Mylan. Additionally, Pfizer and Sangamo Therapeutics unveiled promising data for their partnered gene therapy. Earlier this summer, Pfizer said it plans to spend $11.4 billion to acquire Array, a biotech company focused on cancer treatments. In May, Pfizer announced its $810 million plan to buy Therachon Holdings. Moreover, Pfizer's stock will also benefit from several new approvals. However, none of this has impacted the bottom line yet. The pharmaceutical company isn't demonstrating the metrics that big stock winners show ahead of major runs. Although the pharmaceutical company is growing through acquisitions, sales and earnings are not yet showing strong signs of growth. Overall, the fundamentals say that Pfizer stock is not a buy right now. But let's take a quick look at our charts to see what they indicate. And we're looking at the 20-year monthly chart on Pfizer, and the symbol is PFE. For disclosure purposes, I do not hold any shares of Pfizer at this time. And a couple of things pop out from this chart here. Certainly, the peak there in late 2018, and then the drop in through 2019 to this point here, basically a result of the lackluster performance. Now going all the way back here to 2009, that was a bottom there. But look at this. This is the general trend line going up through here. So there is an upward trend still in progress. It is a bit violated at this point here, but I don't know if that's all that significant, depending upon what Pfizer does here in the next few quarters. And I think that's going to be important. But right now, looking at the MACD, you can see again the top at this point here, and then the drop. Now, the difference between the fast line and the slow line is such that there isn't going to be a bottom in the very near term. So we'll just have to wait and watch that develop to see if there is a bottoming here above the zero line, which I think there probably will be, just given the performance going all the way back here into 2011 or so. I would imagine that this is going to bottom here somewhere in the next several quarters or so. I'm not sure if it's going to happen by the end of the year, but maybe soon thereafter. There are a lot of positives for Pfizer that are in the pipeline. So keep an eye out. Now, moving on down to the MAC histogram, and you can see that it still is accelerating on the downside somewhat, but we're only at about a -1 level, so that's not really all that significant on the downside. So keep your eye on that. Price rate of change looks like we had our first bottom and reflection off of that zero line here. So is that the initial stages of a bottoming process? Possibly. Maybe not. We're just going to have to wait and watch. Looks like we have another possibility there in the RSI, which we have that bottom here and a reflection on up there. We're at a week 39.40. So definitely this may or may not be another sign of a bottoming process starting. It's just going to have to develop over a few more quarters before we can really get an idea. And I think some of the oscillators are going to give us an idea before the RSI. Stochastics may be one of those, and it still is showing the fast line heading on down pretty quickly with the slow line in pursuit. The fast line just went through the 50 line and the slow line is following there. So I would imagine that's going to carry it through to the lower side of that 50 line very soon. I would imagine maybe something is going to occur like this, but that's still going to take several months and perhaps a few quarters or more. Volume looks fine, no red flags there. Williams, we have a very negative point at that level there with a reflection up beyond that -80. So it bounced out of that oversold territory. But I think some more sawtoothing can occur. But we'll just, again, we're going to have to wait to see how these oscillators evolve. Right now, it's a bit early to say that Pfizer is a buy. Some of those oscillators may be able to indicate ahead of time, but they haven't developed yet. So we're still going to have to keep our eye on it. Looking at the price chart, the stock since say about 2012 has ridden above the 50 EMA where it, let's see, stock bounced there in early 2016, late 2016, and then of course now. So I think that's a pretty important level to keep an eye on with regard to traditional technical analysis. So just keep watching that. I would imagine that this stock is going to snap back like it did here, and it is just riding barely above the 50 EMA, if you can see that with that price of $36.91. So something to keep your eyes on. Things are still developing. It's not time to buy. You got to keep your eye on this, but it's going to take a while before some of these oscillators do show any turn. And then at that point, you take another look and then maybe you jump in or you still can wait because it has a pretty good trend line moving on up over the years since 2009. And I don't think that you're going to get hurt too bad if you're not in early. Just wait and be patient. And for today, that's ChewDog Charts. Thank you.